Thank you for listening. Uh, question for Mr. If you have question for Mr. Idris or question for myself, the floor is now open. Okay. Yeah. Any question?
Yes, please.
Okay. Go ahead, madam.
Yes, sir. My question is, what is the rationale behind? It's actually for Mr. Idris. It was in his name. What is the rationale behind the imposition of tax on exportation, if any? It is understandable that they are imposing tax on importation to discourage importation of certain goods and to encourage local industry. What exactly is the rationale behind imposing tax on exportation? Is it to discourage exportation of some of our products as well? I mean, I'm here to see that's the rationale behind that.
Okay, Mr. Idris. I can't say Mr. Idris here. Okay. So, okay, it's not in. I could just, throw my own contribution to that. So, when it comes to tax, there are no, when it comes to VAT, for instance, there's
Yeah.
no VAT for export. If you look at the VAT Act and the second schedule to the VAT, export items are non-vatable. It's among the list of the VAT that are exempt. I mean, items that are exempted from VAT. Now, if you look at
Okay.
also Section 23 of the Companies Income Tax, non-exempt income, income from exportation is also non-taxable, provided that the income is used to buy raw materials and plant and equipment used for the purpose of exports. Okay, so if you and the income enters Nigeria through an approved government channel, like the central bank, that's the money comes into Nigeria. So it's not taxable. So usually the tax, there's no income tax for exports. Okay. And when it comes to VAT added tax, they don't pay VAT. Okay. So, but there could be some form of duties which compared to imports are very minimal because as a country, we are trying to encourage exportation because we are doing more of imports. So I tell you that in terms of taxes, exports do not pay tax, except the company is in an export processing zone, but not exporting, but doing some local transaction, Nigeria related transaction. That's where they pay tax. So when it comes to tax, export business are not burdened based on the tax law. Okay. Hello, madam.
Yes, I'm very much with you. I think there's another question before I ask the second one, please.
Okay. So you
I
have
think
a
someone is asking a question in the chat box. That's why I'm holding on.
okay. Oh, let me check the chat box. Okay. Is this also applicable to export services? How would you define export services? Okay. So the question is I think the person is saying, is it also applicable to export services? When it comes to ex when it comes to exports generally, whether it's goods or its service, they are not vatable based on the factor. But it's now for you to, I mean, to define, for us to look at the export services, because there are some services that you might think is an exported service, but it's not an exported service. Okay, so that's why you see some export services being paid VAT. For instance, someone will be here and you are servicing someone outside Nigeria, and you may say that it's export services, or someone is here, you are servicing a company outside Nigeria, but is a branch of that company you're servicing, and the branch of that company is in Nigeria, yeah. Maybe it's in VI or so, but the head office is in the UK. Because you're servicing the branch, you're calling that export service. Export services is services that you rendered physically outside the country. So the tax law has been so stringent to define export services. And that's why it's kind of tricky when it comes to export services. Okay, so you need to now be sure that okay, this services was physically you went there to carry out the service and you came back to Nigeria. Then that's is export services. I think the essence of doing this, we need to look at that is also it's kind of very strict when it comes to services because services can be performed anywhere. You can be here performing export services to another country in the US and you're seated in your home here in Nigeria physically. So that kind of look like, oh, is this an export services? So the tax authority um, is trying to protect the country from revenue losses, and that's why this definition of export services is kind of strict. Unlike when it comes to goods, exported goods clearly are not vatable. Exported, but when it comes to services, they are not in the tax law, but you must be sure that it's an export services before you claim exemption. Okay, so that's the position of that. So another question here is how does one object transfer between same company accounts captured as income by tax authority? Okay, how does one object transfer between same company accounts captured as income by tax authority? No, an object transfer between company before it's transferred, there should be a source document for intercompany uh, transfer. So when you are transferred from one bank account to another bank account, there should be a voucher that shows that this is an intercompany transaction, so that the tax authority will not take it as an income. Everything will be assumed as an income until you can prove otherwise to the tax authority. So if you don't have your documents, then they may take it as income. But if you have your documents, you defend it to any level. Any other question? Okay, there's another question by Madam Messi. What's the difference between withholding tax and VAT? Why are they the same deduction amount? Okay. What's the difference between withholding tax and VAT? Withholding tax is an advance payment of tax. It's deducted from source. That's withholding tax. So it's deducted from source. So it's like I someone did a job for me and I feel that the person does not like to pay tax. I will deduct it. Is a contractor repairs my AC and the AC of the entire company, and I'm to pay them like let's say 1 million. It's my obligation to deduct, withholding tax on that transaction. Okay, so if I deduct withholding tax on that, if I don't deduct withholding tax, then I'll be penalized. So withholding tax is an advance payment of tax. That means that I will deduct withholding tax and I will remit it for I'm not, the withholding tax is that I'm just deducting an amount of tax in advance from that person. So the amount I deduct will be paid into the person tax account thing. And that is how it's being done so that the person can, at the end of the day, claim a credit. At the end of the year, if the person want to pay tax, all what I've deducted before paying the person will claim it as a credit. They won't pay tax again if his tax is not much. Sometimes in the part of in the class, we have modules for computation. When we do tax computation, you will see better what I'm trying to explain to you. So VAT is a tax on its own. VAT is a separate kind of tax. It's called value added tax. So for VAT is on vatable transactions. There are some transactions that are VAT exempt, and why there are some transactions that are zero rated items. Okay, so basically VAT is a flat rate of 7.5, but withholding tax is not 7.5. They are not the same amount. Withholding tax could be either 5% or 10%, depending on the transaction. And withholding tax is very tricky. So you must always review your tax system for withholding tax, in addition to VAT and other forms of taxes. Okay,